Hey guys, Matt here. So this isn't the weekly portfolio update. I mean, I am going to show my portfolio, but we're mainly going to be talking about one stock in my portfolio, Palantir. And the point of this video is, should I wait for the market crash to buy more Palantir, or should I buy Palantir now? And the answer to that question is yes. Let me explain. But first, I mean, the market today was a really, really rough day for the market, and it was even worse when it started. Like, in the beginning of the day, we were talking the NASDAQ down 1%, 2% today. The Dow, I think, hit between 1 and 2% loss today. Russell was even, pretty bad. Now, it got better towards the end, but, I mean, a lot of these stocks just got wrong. My Ethereum got wrong. Gevo, earlier today, Gevo broke $4 into the threes. Verizon got wronged. ARK took a big hit. I mean, now a lot of these stocks recovered by the end of the day, but oh my goodness. So yeah, everything got wrong today. It got better, but it got wrong. But Palantir, my goodness. Like, if we look at Palantir by the day, earlier today, it dropped into the 1500s. I think it hit its 52-week low today. With this drop in price, like, it is, I mean, Palantir, just look at this thing, man. Let's look at this thing. And yeah, and you think with how this stock is performing, that that Palantir has been financially as a company performing like shit. And it has not. It really has not. Like, every single quarter, this isn't year on year, but quarter by quarter and year on year. Like, every quarter is better than the last. And I'll tell you something, Palantir is damn close to being profitable. I mean, hell, take a look at this. Operating cash flow, positive since March. This does not seem indicative of a failing company. Not one bit. And from a personal perspective, Palantir is well below my cost basis. Like, well below my cost basis of $18.75. So yeah, great opportunity to buy, right? Well, we also know that the Fed is in the process of fixing the so-called mistakes it has made over the past year. So now, I don't know if they're mistakes or not. I'm not really, I can't really call myself an expert in macroeconomics and stuff like that. All I know is since 2020, the Fed artificially kept the market up through asset purchases, and as a result, we got inflation, which led to other things, and now the Fed has to sort of pump the brakes as fast as possible. And when the Fed finally ends asset purchases and starts hiking up their interest rates, all these stocks right here and all your favorite stocks, like, you think it's crashing now, you think the Dow's down now, you think that the NASDAQ's down now, well, I mean, it's probably going to crater even further. Note the word probably. Now, this video is kinda sorta in response to a video I watched from Tom Nash today. Now, I like Tom Nash. I'm subbed to him. I like the video. I agree with everything he's saying, and that yes, buy now might be a great opportunity, but a greater opportunity might be coming towards when the Fed actually hikes up interest rates. Like, that might be a better time to buy. And that sounds perfectly logical. That sounds perfectly reasonable. And that is something I kind of agree with. I think that it's going to happen. However, one other thing to note, and this is going to lead to my strategy here, is that we don't know that. The market is erratic. The market has been erratic. The market has been doing things I didn't think it was going to do all of 2021, and it's still doing it. So we have no idea how the market is actually going to react when the Fed hikes interest rates. Is it going to crater the market? Probably. Do we know for sure? No. Would I bet my job on it? No, not at all. It could be priced in. It probably won't be, but it could be. And one very important thing to note about any stock you have is that you have no idea when the bottom hits until the bottom is over. You have absolutely no idea. Tom Nash doesn't know. He'll be the first to tell you. Financial education doesn't know. Graham Stephan doesn't know. I don't know. I mean, the Fed doesn't know. No one has any idea for certain when the bottom to a stock or the Dow or anything like that is until the bottom is over. And we're talking significantly over. So yeah, you could wait until the Fed hikes up interest rates and then watch your stock crater like Palantir and then start scooping up shares. You could, unless it doesn't. You know, unless the Fed does it and it doesn't go. And then this is the bottom. Now, it's probably not the bottom, but let's say it might be, and you missed it. So this is my strategy with Palantir. I'm going to go in dumb. And going in dumb is just a fancy word I like to use for dollar cost averaging. So basically, today, I spent about $250 on Palantir, which bought me, I think, what was it, like 11 shares or something like that? What was it? We're talking 16 shares. Sorry, 16 shares. And my idea is that every week or so, I'm going to drop $250 into Palantir. And every week, depending on the price, I will either buy more shares of Palantir or less. And I will keep doing that until we know when the bottom has been reached. And like I said, that will be after the bottom is over. And by doing this, I am guaranteed, as long as Palantir continues to function, we have a functioning stock market, we have a functioning economy, and Palantir continues to perform, I am almost guaranteed to make money. Now, will I make as much money as someone who waits for the bottom, perfectly times it, and watches the stock price soar from there? Absolutely not. I know, but I think the way I'm going about it now is, you know, I will be guaranteed to make a lot of money in the long term. So I'm just going to play it dumb. I'm just going to dollar cost average. And I think that that's the best way for me to approach this thing going forward. But anyways, take care. Have a good day and eat your vegetables.